right. Good morning. Welcome to the morning market briefing. It is Michael Jordan Day, April 23rd, 2026. I hope you're doing well. We have a fantastic call for you today. Thomas, as soon as Thomas gets his headphones sorted out, which he's still working on, but he'll figure it out. He's smart. I may be accused of whistling by the graveyard as I say this, and so I want to disclose very forthrightly that we are certainly attuned to the risks of potential for higher inflation. Having said that, everyone knows that this CapEx boom is happening, whether it's in data center, and we'll talk a lot more about it today, and how that's going to, and the thinking right now is that that's going to mandate that prices go up because they got to pay for the data centers, they got to pay for all this new capacity that's being built. This is antithetical to anything that we've learned in Economics 101. And that is, when you have more capacity, you have more production, and when you have more production, you have more supply, and when you have more supply, you have lower prices. That is the biggest takeaway of these capacity additions. I know a lot of people are talking about, well, the price squeeze is going to go and it's going to get crazy. And what I would say to them is that I do not think that the tail risk is inflation right now. I think the tail risk is deflation. I'm not calling for it, but I am saying that if we don't have good growth, then we are going to end up in a deflationary morass, because we have too much capacity. And this is not a this year thing. It may not even be a next year thing. But what I am saying is, when this capacity comes online, we better get massively accelerated economic growth here in the United States, because we're going to have way too much capacity. Prices are probably going to come down anyway, and it's going to have to be made up on the volume side. So that's my big picture outlook, and this is one of the reasons I'm just not as concerned. I'm much more, if you had to say what am I most concerned about long term in terms of the economic growth in the United States, I would say that we have too much capacity and prices are going down too much. That to me is the tail risk. Historically, that's caused the biggest market crashes. And that's why we've been extending duration on bonds with interest rates at the highest positive real yield since at least the mid-2000s, maybe even before. So I just wanted to bring that up, because we're going to be talking a lot about CapEx in this call, as well as improvement in the overall economy. So I hope that was clear enough, Thomas.
Yeah, no, I tend to agree on that too. And I think on the inflation side, it's similar to Liberation Day, where you're going to see inflation, but it's definitely going to be in pockets, right? So 3M, for example, is going to increase their prices by 50 basis points in May due to the inflation they've had from the oil derivatives in plastics, right? But at
so you're saying Post-its, instead of being $1.29, will be $1.30?
Exactly. You're going to see inflations in small pockets, but and as a recent graduate that was looking at economics, the overall theory is, yes, that producers are going to pass on cost to the consumers. But what I think that people often ignore is that if there isn't demand for these increased prices and a diversified market, you're going to see companies like Pepsi, where they're focusing on restructuring their business, optimizing. Today, they actually just rolled out an agent where they're going to continue their optimization and cost saving, so they don't actually have to pass these inflationary plastic costs off to the consumers.
So would you say they're improving productivity?
They're improving productivity, and I think that you're going to see a lot of businesses not necessarily pass this price directly on to consumers and look for more of a restructuring going forward.
And this is exactly what happened in the 80s and 90s. This is the George Gilder phenomenon. Guys, if we have more data center capacity, if we have more semiconductor capacity, if we have more oil and gas capacity, prices will come down, all else equal. And that should set the stage for improved economic growth. Now, can we capitalize on it? That's up to the American people. So we'll see what happens. Tesla, though, talking about CapEx. So we're going to go through a number of these companies, and we're going to try to make it interesting today. Gonna have a little bit of a back and forth with Thomas and me. None of this should be construed as investment advice. I'm looking at super producer Hicks right now, but we're going to be talking a lot more about individual companies today and what it means for the broader landscape. And I may render an opinion that should not be taken as a recommendation. So I also want to make that we do have that disclosure that we've said every call, but I want to make that especially clear today. So let's talk about Tesla. Tesla's down 3%. It wasn't down 3% when they first reported, Thomas, because they came out with really good free cash flow numbers, and they came out with really good and improved outlook for just sales of their vehicles, even though they're sunsetting the Model S and Model X. The last one's just rolled off the production line. Big concern here is CapEx spending, which was revised up and implies that it's going to go from $3 billion in this last quarter to an average of $7 billion over the next few quarters as they invest in new capacity for Optimus, as they invest in new capacity for Cybercab and the Tesla Semi, as well as their own data centers to power all of this. On top of that, they pushed out a few timelines on full self-driving, and now people are concerned that there's going to be a liability because the hardware in there, the hardware 3 in 3 million Tesla models vehicles is not compatible with their full self-driving unsupervised technology, which means retrofits, which means what he calls micro factories in major metropolitan areas. That's going to be expensive. So this is why the stock is down this morning. Thoughts on Tesla? I think my biggest takeaway is that Elon is not focused on Tesla right now. He is focused on SpaceX, and for good reason. They're about to do one of the biggest IPOs in the history of the world, maybe the biggest.
I totally agree. I mean, the thing about Elon too is when he's running one of these businesses, he's making every big decision too. And you look at a Cursor acquisition yesterday. I mean, he's got to be on all cylinders right now, looking everywhere for any sort of investment opportunity. Yeah, I think that he's definitely more focused on SpaceX, and he's kind of been doing a little bit of a PR campaign these past couple months too on SpaceX, so he might be a little busy with that.
Definitely. Lam Research, SK Hynix, they're all talking about more capacity coming in. I'm not sure. I know NextEra Energy, the utility, just reported earnings. They reported very good earnings. I think they guided to the high end of their range. But I do think that this trend, Thomas, into more production is happening. Lam took up its guidance for semiconductor capital expenditures from $135 billion this year to $140 billion. So that's a 5% increase in the space of a couple months. And then we're seeing it actually hit some of the companies that are poised to benefit from this. The rental market is starting to accelerate, as we're seeing from United Rentals last night. Yeah,
I mean, great numbers out of United Rentals last night. We've kind of just been in this pit of certain segments of the construction market, and we've been seeing the ISM manufacturing numbers, the guidance from Fastenal, and it's looking like we're kind of finally getting a little bit of this turnaround in certain parts of the demand sector.
CSX and Union Pacific both saw volume improve. CSX actually now saying that the strength is broadening from just Southeast infrastructure to steady infrastructure in general. They're also talking about emerging opportunities in chemicals, which I thought was interesting. And they say they have good momentum in their intermodal business because trucking supply has tightened. For context, last time they talked about soft trucking market. So we've gone from a soft trucking market to a tight trucking market in a single quarter. Now, a lot of that's capacity driven, but in terms of the new DOL regulations and driver's registration and English speaking requirements. But I think some of that is also due to demand. You're also seeing that in Union Pacific, as I mentioned, and some others. But Texas Instruments also talking about broad-based industrial recovery. This was starting last quarter. Texas Instruments provides a lot of analog semiconductor chips to this space. And so at Narwhal, we own Analog Devices. And so this is going to be a very positive read for ADI. The industrial segment. So just some numbers here to give you context. I went all the way back to 2007 for Texas Instruments. This is the best Q1 on a quarter-over-quarter basis. I mean, at least to 2000. I only went back to 2006. Right. But typically you don't see it, especially when they were more geared to consumer electronics. You weren't seeing a big move in Q1 versus Q4 because Q4 is obviously the Christmas quarter. But so I think this might be the best sequential Q1 ever on a percentage basis.
I was just shocked. I felt like the power semis were just not a part of the recent narrative whatsoever in the last month at all.
And then all of a sudden in the last 8 days, it's been...
We had that big pop like maybe 3 days ago in the smaller cap power semis, but I mean, this is...
And what's interesting is, yes, it was data center. Data center grew 90%, casual. Yeah. That's on a year-over-year basis. But it was only up, it was 70% last year. And it was only up 25% quarter-over-quarter. So, annualized maybe 150%. So, decent, I guess, if you can get it. But industrial was up 30% on a year-over-year basis. This is their biggest segment, and it was up more than 20% quarter-over-quarter. This is not just due to data centers. This is due to very broad-based growth. They say it was all geographies grew sequentially. It continued to accelerate throughout the quarter. They kept thinking it would break, with the Chinese New Year and then the Middle East, and just continued. And they said it's not just data centers, the energy infrastructure, power delivery, not only aerospace and defense. They saw it all across all sectors of industrial, all customers in terms of regions, and also all sizes of customers. So they're like, we're not raising guidance more just because we want to be mindful of the overall macro backdrop, and I want to see how sustainable the growth is, and that was factored in the guide. But unbelievable numbers from Texas Instruments, and that stock's up 10% pre-market. Graco did, which is a process technologies business. They have a lot of valves. They make the sprayer that goes on spray paint. They also are very levered to the oil and gas business. I think they're getting a little bit hurt on deliveries relative to what's going on the Middle East side. So I think you're seeing a little bit of a push out on that. You're seeing that at Honeywell also. Honeywell's down pre-market. So we'll see if those guys can come back. I think the market's kind of shooting first on both Honeywell and Graco. So, but by and large, the industrial sector of the economy, and I think you would agree, Thomas, is really ramping up here.
Yeah, and I think it kind of just the overall theme of the earnings so far have fit the theme of broadening out the economy. I mean, the Mag 7 is definitely in a great spot right now, and they've been really driving back. But when we see the different sectors of the different segments within these businesses being successful rather than just mega projects, I mean, you look at URI, it's not just mega project growth, it's Gen Tool, it's specialty. And the different segments within Texas Instrument as well, I think it really supports the narrative that we're not just going to see AI is the only winner, these hyperscalers as the only winners in the economy going forward.
I mean, and you're seeing that American Express as well. Millennials and Gen Z was up 17% on a year-over-year basis in terms of spending. Travel and entertainment accelerated up to 9%. If you had told me, Ben, what is one place between February and March, when we enter the Middle East conflict, that would really get hit by this conflict, I would say, yes, oil and gas, you're going to have some disruptions. You're also going to see massive travel declines because people feel unsafe. And also, by the way, we had the TSA stuff. People feel, unsafe on the plane, and you're having significantly higher airline prices. I mean, we're seeing it here, even here at Narwhal on the corporate side. And yet, revenue is accelerating significantly in travel and the airline vertical. Airlines were up. I don't know if I have it here, but they accelerated from like 3% to 9% in terms of revenue. So, I mean, we're seeing broad-based growth. We're seeing small businesses accelerate even despite the weak NFIB Small Business Optimism Survey. So that's good news. And I feel like I'm just saying this is good, this is good, this is good. But in general, it is. What I would say is a little bit weak is some of the government contractors, Lockheed Martin's down 3%. They have a new CFO there who's, I think, giving them a little bit more of a dose of reality in terms of how they account for things. And then you have, of course, the software side. And on the software piece of it, IBM's down 8%. They basically had a guide down on organic growth. ServiceNow is down 13% pre-market. I think that is overdone, frankly, on ServiceNow. Now, we do own ServiceNow, but I would I wouldn't be surprised to see activity in accounts on ServiceNow over the next few days, because I think what they said is that they're not losing customers to AI. In fact, they're capitalizing on AI, but the narrative is being written. And I think their acquisitions have actually been very additive, and I think you're going to see acceleration. They have a financial analyst day on May 4th where they're going to come out with more long-term forecasts. And he said expect accelerated revenue and accelerating margins. And by the way, the street has flat margins and flat revenue growth as far as the eye can see. To me, that's good for the long term for ServiceNow. But the market saying, given the acquisitions, you should have had better growth.
Yeah, I tend to agree. I think the weirdest thing for me, at least on software so far, is if one software name does bad, regardless of what they do or what their business line is, all software sells off. I mean, you saw after ServiceNow reported yesterday, I mean, you had like cybersecurity software stocks down. So it's kind of just, it's a volatile space right now where I think, honestly, starting since the beginning of the year, the software apocalypse narrative was kind of written. So any sort of drop of bad news, I think, provides actually a pretty good buying opportunity. You're
shooting fish in a barrel if you're shorting software stocks right now. Yeah, I mean it's like as soon as the company reports earnings, it doesn't even matter what they do. It's like, okay, well, at least that catalyst is out of the way. I can go back to shorting. So I think that's the narrative is we've got the catalyst, that's done, boom, short.
Yeah,
why not?
And I think a lot of guys were shorting at the bottom of the Iran war conflict too, and
that's true.
Had a little liquidation.
Yeah, I think the recent rally was a little bit of a short squeeze. Even yesterday, tech just accelerated throughout the day, and I think that was a little bit of a squeeze into some of these reports. Who's having a worse day, Thomas? Is it Bill McDermott with his stock down 13%? I feel like he never has a bad day though. Or is it this lady, Heidi O'Neill, former exec? She was 28 years at Nike, and now she is going to be the next CEO of Lululemon, taking over on September 8th. We actually have a tweet here from an analyst. She was getting panned on Twitter by some relatively respected analysts. People who've never met her are just roasting. I've never seen someone who is, just had a good career at Nike ever just be destroyed on Twitter before she's even done anything.
Yeah, this was wild. I mean, they were tearing her up. I mean, I think
Can we share that, Hicks?
The expectation for, I mean, they've been planning a CEO here for a while. It's kind of, I think that people were expecting a big name to come out of here since, I don't know how much Lulu's down, but it's down probably 70%?
It's probably something like that. It's down 5% today, at least. I don't know. Yeah.
Just with the recent moves in the Nike, I'm not sure if this would have been my personal pick, but man, yeah, she's getting teared apart.
Yes, like this guy from Hedge Eye says Heidi O'Neill is literally the worst, all caps, choice to be the new Lulu CEO. She's going to turn this company into an even hotter mess than it already is. So much talent out there, and they picked the person that did nothing but fail at Nike. The board messed up big time here. I know me being loud on this ensures I'll be blocked from all access. I don't care. This is laughable. Another guy said he's disappointed. Says, let's hope this doesn't derail Lulu's potential. And then finally another one says, didn't even know Heidi worked at Levi back in the day. Jesus, does this board of directors even see the amount of outright collusion anybody on the outside can see? I've done this job for 20 years and never seen this level of BS ever. So, and then he concludes saying, "Have attached what I said about Heidi a few years ago in case you care. She isn't a product person. Lululemon has a product problem. What WTF is going on with this company?" So, tough day for Heidi. I mean, you get a job as a CEO of a Fortune 500 company that you just get smashed on Twitter. But I don't know. We'll see what happens. Spirit's having a good day, though. They could get $500 million from the administration. Howard Lutnick's for it, saying it's going to save 14,000 jobs. Transportation Secretary Sean Duffy's against it, saying if no one else wants to buy them, why would we buy them? Which is a fair question. It would be interesting considering the U.S. doesn't have a state-owned airline. I'm not saying that's a bad thing, though. I mean, the fact that we don't have a British Airways or an Air France or a Lufthansa or a Swiss Air. I mean, airlines have historically not been good investments. I don't know why a government-owned airline would be a better investment.
I'm not necessarily for the government buying into really any public companies, and I would probably shy away from buying into one of the highest bankruptcy risk industries ever.
Yes. Especially one that's already bankrupt. Southwest Airlines also has its own problems. They can't fill their planes. Their load factor is about 10% lower, 74% versus Delta's at 81%. So they're down 2% pre-market. Netflix is up 1%. They're buying back $25 billion of stock. We do like Netflix. They should be up. I feel like Comcast numbers should be good for them, a lot of streaming. And I think Comcast took a lot of share from them in terms of streaming with the Olympics. Their Peacock revenue was absolutely through the roof. So I think media revenue there was up 61% due to the Winter Olympics. So they just crushed that. And then finally, Thomas, just want to end with some government news. We do have Pete Hegseth firing Navy Secretary John Phelan. The reason for this is he's not moving quickly enough on Trump's shipbuilding priorities, which I do think this probably bodes well for companies that we own, like General Dynamics. So that's the investment takeaway there. The tactical takeaway in Iran is a little bit puzzling, considering that we probably have the most significant naval operation going on that we've had for decades with the blockade right now, and now you're firing your Navy secretary. And if you're doing it because of the shipbuilding things, like, couldn't you just wait a little bit or done it before? I don't know. That would be my opinion. Huntington Ingalls might be a beneficiary of this too. We do own some of the bonds. And then finally, just a quick update on Iran. There's a headline said that according to an Iranian news agency, and that's trumpeted by China as well right now, that Iran-U.S. talks in Pakistan may see breakthrough in preparations either tonight or tomorrow. So it could be a good Friday.
I think we're going to get another little snippet tomorrow at about 9:35. That's going to give us a little ceasefire preview, and it's going to happen over the weekend. That's my take. Have
some good vibes going over for the weekend.
A little feel-good Friday.
Awesome. Well, I hope everyone is doing well out there. The economy seems like it's in pretty good shape. Not as concerned about inflation. Some of the companies reporting really providing some interesting color on that. If you have any questions, do let us know. It is tomorrow day. It is burrito day. We're going to enjoy that. Hope you enjoy the rest of your day. We'll see you tomorrow. Bye.